Welcome back to Syncounting Tax Academy. Today's lesson is about something that surprises almost everyone the first time they hear it. The IRS does not have forever. They work on a clock. That's right. Even the IRS has to watch the time. Some people think the IRS can come back years and years later, whenever they want, and ask for money. That sounds scary, doesn't it? But today, we're going to learn something important. The IRS has rules. And one of those rules is about time. This rule is called the Statute of Limitations. That sounds like a big, complicated phrase, but don't worry. By the end of this episode, it will make sense. And once you understand it, taxes feel a lot less scary. Samai. Wait, a clock? Like the one on the wall? Sam. Yes, just like that. Imagine a big clock hanging in the IRS office. It doesn't tick every second like a normal clock. Instead, it counts years. When the IRS officially writes something down, that clock starts running. Samai. So the IRS is racing against time? Sam. In a way, yes. Once the clock starts, the IRS only has a certain number of years to act. They cannot wait forever. They cannot ignore it forever. And they cannot surprise people forever. Time puts limits on power. Leighton. But when does the clock actually start? Sam. Great question, Leighton. The clock does not start just because the IRS is thinking about you. It starts when something becomes official. For example, when a tax return is filed, or when the IRS records a balance due, or when they officially assess a tax. That moment is important, because once it happens, time begins. Leighton. So writing it down is like pressing the start button? Sam. Exactly. Think of it like starting a stopwatch. Before that moment, the clock is silent. After that moment, the clock is running. Sam. Here's something many people don't know. The IRS doesn't use just one clock. They use different clocks for different actions. One clock is for assessing tax. Another clock is for collecting tax. Another clock can even apply to refunds. Each clock has its own rules and its own time limit. That's why understanding which clock is running matters so much. Samai. Why does the IRS even have clocks? Sam. Because time protects people. Imagine if nothing ever expired. Imagine if someone could come back 30 or 40 years later and say, "Remember that thing from when you were a kid? You still owe me." That wouldn't be fair. So the law says, at some point, things must end. Sam. The Statute of Limitations exists to create balance. It protects taxpayers from endless stress. It forces the IRS to act responsibly. And it gives everyone a clear timeline. Nothing lasts forever, not even tax debt. Leighton. What about when someone already owes money? Sam. That's when the collection clock starts. Once the IRS officially records a tax balance, they usually have 10 years to collect it. 10 years sounds like a long time, but it's not forever. During those 10 years, the IRS can send letters. They can set up payment plans. They can take certain actions allowed by law. But when the clock runs out, the IRS must stop. Lala. Wait. You said usually. Does the clock ever stop? Sam. Excellent listening, Lala. Yes, sometimes the clock can be paused. This is called tolling. Lala. Tolling? Sam. Think of it like hitting the pause button on a video. The video doesn't end. It just stops moving for a while. Certain actions can pause the IRS clock. For example, if someone files bankruptcy, if someone asks for certain types of relief, if someone is out of the country for a long time. During those moments, time is not moving forward. Sam. Pausing exists for fairness too. If someone is asking for help, or waiting for a decision, or legally unable to respond, the law says the clock should not keep running. But here's the important part. Pausing does not reset the clock. It does not give the IRS extra years. It simply stops the clock for a while. When the pause ends, the clock continues from where it left off. Samai. So if I ignore letters, does the clock stop? Sam. No. Ignoring letters does not pause time. The clock keeps ticking whether someone pays attention or not. Layton: what if someone moves? Sam: moving does not stop the clock either. Lola: what if someone is scared? Sam: being scared does not stop the clock, but learning does. Sam: this is why understanding time matters so much. People who don't understand the clock often panic. They make rushed decisions. They agree to things they don't fully understand. But people who understand the clock can think clearly. They ask better questions. They make better choices. They protect themselves. Knowledge turns fear into confidence. Sam: let's use a simple example. Imagine someone owes money, and the IRS starts the clock. Year 1 passes. Year 2 passes. Year 3 passes. If that person knows the clock exists, they might choose a smart plan. If they don't know, they might think the IRS lasts forever. But when year 10 arrives, the clock reaches 0. And when time runs out, the rules say the IRS must stop collecting. Layton: so time gives people protection? Sam: exactly. Time creates limits. Limits create fairness. And fairness creates trust in the system. That's why understanding the Statute of Limitations is so important. Sam: for parents listening along, this lesson is powerful. Many adults never learn this. They grow up believing tax problems last forever. But teaching children early that rules exist, time exists, and knowledge matters. That builds confidence, and confidence changes lives. Samai: knowing this makes taxes feel less scary. Sam: that's the goal. Fear comes from not knowing. Confidence comes from understanding. When you know the rules, the clock works for you. Sam: today, we learned that the IRS has a clock. We learned that time starts when things are written down. We learned that time protects people. And we learned that knowledge removes fear. The Statute of Limitations is not about avoiding responsibility. It's about fairness. It's about balance. It's about understanding the system instead of being afraid of it. Altogether, time matters. Knowledge protects.